Tesla has an expertise in terms of ramping up production of EV models that the other automakers just don't have. The demand problem that we really see, it does pertain to EVs, but not necessarily Tesla EVs.
I think that's the golden goose. I think when you look out into the next 5-10 years, and obviously Kathy talks about this, the robo-taxis, I think that's where this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers, and here we are at $3 trillion, where a lot of investors thought $1 trillion was never going to happen.
But Dan, you were already, of course, bullish on Tesla with a $300 price target. You bumped it to $350. What specifically stood out to you from this earnings report or from the earnings call that warrants a $50 price target bump? So Garrett, not a whole lot in terms of new developments, yet you raised your price target by $15 to $325. What makes you more bullish after the report if we didn't get a whole lot of updates?
In this video, a couple of Tesla stock analysts are asked some tough questions following Tesla earnings.
Let's talk Tesla, and when we talk Tesla, we of course talk to Dan Ives, Managing Director, Equity Research at Wedbush Securities. Dan, happy Friday. Good to see you. Thanks for joining us.
Happy Friday to you. Great to be here.
All right, so Dan, Tesla shares took a beating after earnings, basically flat today, but down about 6.5% on the week. Yet you raised your price target after earnings. So what has you so upbeat and what has investors so downbeat?
Yeah, I mean, Carolyn, we've talked about this before, me and you. This is just what I view as the second inning of a 9-inning game for Tesla. And I think ultimately now you're starting to see demand stabilize, and I think ramp, especially in China and the US. Prices, now look, Musk didn't take off any more price cuts, which why the stock knee-jerk got hit a bit, but they're not going to put their back against the wall. And I ultimately believe 95 to 98% of price cuts are in the rearview mirror. And now you start to get that sum of the parts story from superchargers to AI/FSD, talk about the OEM that they're in talks with, to battery technology. And I believe this is a stock that continues to go higher despite this knee jerk after what's obviously been a parabolic year.
But Dan, you were already, of course, bullish on Tesla with a $300 price target. You bumped it to $350. What specifically stood out to you from this earnings report or from the earnings call that warrants a $50 price target bump?
Now, this is a great question. What specifically on the earnings call, after all, price target raised from 300 to 350 immediately after the earnings call, what specifically on the earnings call justified this price target increase? E.g., what did Dan punch into his Tesla valuation model that spat out a $350 price target based on new information from the earnings call or new information that happened to appear in the same period of time that the earnings call took place? Of course, there is an answer to this. Elon Musk in his opening remarks disclosed that a large OEM is in discussions, early talks with Tesla about licensing FSD. Odds are this won't happen tomorrow, but any competent analyst surely has a valuation model that spans multiple years, in fact, dare I say, a decade, and would be considering the implications of this. I'm just some dumbass on the internet. Even I know the concept of a DCF valuation. Look into the future, look at the cash flows, discount it back to the present moment, bam. So, if new news appears suggesting the company may be printing insane amounts of money by licensing software, almost pure profit to other companies in the future, that's something that you might expect somebody to put into their valuation model and have a meaningful impact on their price target. In fact, we saw this happen maybe a week or so ago. You guys remember Tom? Tom had updated his valuation model, the price target increase, on the back of the supposition that in the future Tesla would license FSD to other companies. That was a justified price target increase for a very specific reason. Looking forward to hearing what on the earnings call caused the update on Dan's price target. P.S. I really would like to see some of these endless valuation models. Does anyone know where I can find them? Please, let me know in the comments or DM me on Twitter, even better. Seriously, by the way. I want to see what their valuation models look like.
Yeah, I think ultimately it's really become the autonomy of electric vehicles in terms of everything that they're doing, because now from a valuation perspective, it's some of the parts. It's not just from a demand, from an auto, from a delivery. I view now you start to add what the battery technology could be, what superchargers could add, and ultimately the drum roll. And I believe this is how you get to $1.5 trillion, $2 trillion market cap. It's FSD AI. So I view stock selling off knee jerk, I view that as sort of table stakes relative to where I see the stock going over the next 6 to 12 months. And I think yet again, over the coming months, the bears will go back into their caves in hibernation mode.
Well, perhaps I'm wrong, but it seems like the proportions of art to science in Dan's valuation model and Tesla price target, 100% art, 0% science.
What is the opportunity in licensing FSD? Because I know you're bullish on that. You just mentioned it. But what's the end game there? What could that look like?
I think that could ultimately be even bigger than the opportunity that we've already seen in Tesla the last decade. Because of the software-based opportunity on FSD. And I think if they start to actually license out that technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose. I think when you look out into the next 5-10 years, and obviously Kathy talks about this, the robo-taxis, I think that's where this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers, and here we are at $3 trillion, where a lot of investors thought $1 trillion was never going to happen.
But Dan, you talk about the murky macro picture, I believe is your terminology for it. Elon Musk says the challenges of these uncertain times are not over. Do you think he's going to have to continue to slash prices to spur demand, and at what expense or what cost to margins?
Look, I think around the edges, you can maybe see some rebates, some price cuts, but ultimately in terms of margins, I think they're flatline. I think flattish to ultimately they start to rebound in Q4 into next year. Not going to box himself into a corner, Tesla, especially what we're seeing in China. But I believe the vast majority of that's in the rearview mirror. I think demand looks strong. And you talk about the murky macro. Our view, this is not calling the stock for the next few weeks. Fed, in terms of worries about, talking the tough talk, even though the white flag, in my opinion, is raised in terms of the end of these rate hikes. I look into 2024. I see a bright green light for Tesla, for tech. I think it's the start of a new tech bull market, in our opinion.
And have we seen the lows for gross margins?
I believe we have. Look, it could have maybe 50, 100 bips, but I think our whole view is it troughs. And I believe we are troughing. And after the stocks had just this massive move, you'll see those knee jerks in terms of the sell-offs. But I think this is a stock ultimately, as we go into U.S. Open, we're going to have a stock somewhere in the threes, in my opinion.
Time to spotlight Tesla following its earnings report earlier this week. For that, we welcome in Garrett Nelson, Vice President and Senior Equity Analyst at CFRA Research. Garrett, always good to have you on the show. Thanks for joining us.
Thanks for having me.
So Tesla shares under pressure today, off about 0.3%, adding to its weekly losses of about 7%. But based on your latest call, it sounds like you'd use the 7% decline as a good buying opportunity?
Yeah, I think that's right. Just given the meteoric run-up that the stock has had so far this year, it really wasn't a great setup heading into the earnings release. The bar had been set so high, and so with the earnings release, although they reported a significant bottom line beat, there wasn't a whole lot in terms of new developments. They reiterated their prior 2023 auto volume guidance, and just not a whole lot in terms of new developments. Margins are under pressure. Obviously, that was the focus of the release. So, we view this sell-off this week, though, as a buying opportunity. And really one of the market's strongest long-term earnings growth stories, we think, is how we view Tesla.
So, Garrett, not a whole lot in terms of new developments, yet you raised your price target by $15 to $325 from I believe your new price target is $325, right? From $310. So
that's right.
What makes you more bullish after the report if we didn't get a whole lot of updates?
Well, the tough questions keep coming for these analysts. You raised your price target immediately after Tesla earnings. Why? What changed? What numbers are different now in your valuation model as opposed to before the earnings call? Please explain. Looking forward to Garrett's response as much as I was to Dan's. Anyone want to guess in the comments below the proportion of art versus science in Garrett's valuation model / price targets?
Yeah, so actually we took our rating from strong buy to buy last month after this big run up just on valuation. And we do see some upside still, but it warrants a buy rating in our opinion, not a strong buy at this point. Really the lion's share of the gains have happened so far this year, we think. But, we do see some upside over the next 12 months, just not as much upside as we saw before. So, but there's a lot of things that we like longer term in the story. They're continuing to ramp the Austin and Berlin factories. They just started first production of the Cybertruck. We think they'll be debuting a new EV model next year, which some are already calling the Model 2. We think it'll be a smaller coupe model. So there's still a lot of positives. And of course, they have this goal of growing their annual volumes to about 20 million units in the year 2030. That would make them the world's largest automaker in terms of production and sales.
Yet they did warn that production would slow down in Q3 due to some factory shutdowns. Are you concerned that Tesla has a demand problem at all at this point?
I'll give the anchor the benefit of the doubt here and assume that the statement and the question in the same sentence were entirely unrelated. But just to be clear, Tesla on their Q2 2023 earnings call told investors there will be some downtime because they're going to be doing upgrades globally in multiple factories in Q3. Therefore, production volumes will be lower due to the factories being shut down in part due to the upgrades. But then she followed up with a question about, do you think there's an issue with demand? Tesla producing less vehicles in Q3 than they did in Q2, should that come to pass, which seems extremely likely, won't be a result of a lack of demand, but a lack of production for upgrades, as they said on the earnings call. Just making sure everyone's clear on that.
The demand problem that we really see, it does pertain to EVs, but not necessarily Tesla EVs.
I'll take it from here, Garrett. And he's right. There's no question about demand for Tesla vehicles. However, if you make a steaming pile of shit, it's overpriced, it underperforms, the software sucks harder than a vacuum, there's major reliability issues. There is absolutely questions about demand, and here's why. Teslas exist. Were there no Tesla vehicles available in the marketplace, many electric vehicles would look quite compelling. Total cost of ownership, features, functionality, performance, generally speaking, on par with, if not better, than an ICE vehicle. Problem though, Teslas do exist. Tesla is the gold standard. Teslas are the benchmark, which all consumers who do their homework, which is not all of them, but most, are comparing a potential electric vehicle purchase to. What does the Tesla do? Features, functionality, performance, range, value, and a lot of the intangible stuff, like fart mode, dog mode, sentry mode, these kind of things, versus what I'm considering buying that's not made by Tesla. We're seeing this now, where companies like Ford are slashing prices of their already extremely unprofitable vehicles. Latest example, the F-150 Lightning, slashed by $10,000 when we know Ford is losing about 40% on every electric vehicle sold. Ford's trying to reduce the price of their electric vehicle offerings enough that they can compete with Tesla. The problem is, Tesla's making insane amounts of money on every vehicle sold, and Ford's already losing catastrophic amounts of money on every vehicle sold before the latest discounts. Tesla is forcing the industry to make better electric vehicles and drive their costs down, or they go out of business. I definitely don't know how this one ends for the companies trying to compete with Tesla, but I can certainly say I'd much rather be in Tesla's shoes. The shoes which you would need a telescope to see from second place.
If you look at the latest data, and this is from Kelley Blue Book, average transaction prices for new EVs in the US were down 20% year over year in June. And inventories are now at over 100 days supply. Now, the historic average in the auto industry for inventories at dealerships has been around 60 days. So, EVs are actually at 103 days supply at the end of June compared to all vehicles, which are only about 53 days supply. So we are seeing signs of EV market oversaturation, but we're not seeing it as much with Tesla EVs. It's more the other EVs that other automakers are putting out.
But how should investors be thinking about EV fundamentals given the economic uncertainty? Even Elon Musk said he has no idea what's going on with this economy right now.
Yeah, we think consumer fundamentals are actually surprisingly strong. And that's really been one of the big stories, the big themes that we've seen in 2023. And we look at Tesla specifically, their demand is really off the charts for the Cybertruck. You have a reported reservation count north of 1.7 million units. I mean, that's roughly 8 or 9 times the reservation count for the next most in-demand EV model. And so we feel very strong about demand for Tesla's product. Their customers are absolutely fanatic about the product. They're doing a lot behind the scenes in terms of AI and full self-driving development. Each software update improves on the last update. And so they're doing a lot behind the scenes to really drive long-term value. So we continue to like the story long-term.
Do we have a price on the Cybertruck? I know it used to be 40 to 70, but that was pre-inflation. What's the new price for the Cybertruck?
Yeah, good question. They're still working that out. It really depends on the specs of the model that the customer ordered. So that will be worked out. But there's no question that demand is very strong for this vehicle, and it's unlike anything that we're seeing for any other forthcoming EV.
So this is quite the point. In excess of 1.7 million reservations for Cybertruck, nothing else even close to a similar number of reservations. In fact, I'm not aware of a single electric vehicle with even 10% as many reservations. Very few would be lucky to have 1% as many reservations. This is actually really worth taking the time to think about. Despite all the armchair Einsteins explaining how no one's going to want a Cybertruck, they can't do real work because they look different, spoiler alert, they can, but let's not go there. Based on the sheer number of people who've reserved a Cybertruck and the severe lack of people reserving other electric vehicles from other companies, unless of course we include the fraudulent reservations, claims made by CEOs committing securities fraud, many of which will soon be spending a large portion of their life in prison, nothing comes close. Tesla's selling more electric vehicles than anyone globally, and the reservations for their forthcoming Cybertruck put everyone else to shame. So still waiting for that competition to come anywhere other than all over themselves, as opposed to for Tesla.
And also, Tesla has an expertise in terms of ramping up production of EV models that the other automakers just don't have. You see from Rivian to Lucid to Ford to General Motors, they're all struggling to ramp up production of these new EV models. And we just don't see Tesla having that level of difficulty given their expertise in the space.
Another crucially important point, not only are Tesla vehicles superior on everything that matters, not only are they far more profitable, in fact, outside of China, they're the only EVs that are profitable, period. Everyone else is losing stupid amounts of money. But they can ramp production on new models and existing models way faster than any other company. So let's just recap here. Vastly superior products, significantly cheaper to produce, insane demand, and the ability to massively increase production faster than any other company on the planet. All of these traits are true of Tesla. Once again, I think anyone who's sane would rather be in Tesla's shoes than any of the other companies attempting to catch up.
And just finally, you talked about gross margins being under pressure, of course. Those price cuts helped spur demand, but came at a cost, right? Do you think that margins get worse before they get better?
No, we think second quarter is pretty close to the inflection point. I can't guarantee that third quarter won't be a little bit worse, but it seems that we're pretty close to a trough in terms of gross margin, and that things will improve from here. At the very least, as the quarters go on, their comps are going to become easier, and so but they made that choice early in the year to sacrifice margin for volume. And it sure paid off in terms of volume, as you see their record quarterly sales in the second quarter, 10% above the prior record high in terms of quarterly sales. And so, but margins are certainly on the mind of all analysts still at this point.
Yeah, Tesla shares adding to those early losses right now, off about 0.8% right now, but still up a whopping 112% year to date. Garrett Nelson, CFRA Research. Always a pleasure to have you. Thanks so much.
Well, I think in the presentation they had pictures of the production line, so I think that the production line is up as far as like what it's supposed to be doing. What it sounded like from the call and from my experience with Tesla's ramps for, it seems like my whole career or half my career is that they will have lots of problems, and anybody who doesn't think that this won't be a difficult process over the next 6 months for Tesla They're wrong. It will be difficult for them, and they're trying to do very incredible things here. So that's okay, because they're now in the final process of actually scaling this new and incredible vehicle. So people have to be a little bit patient if they want something that's going to be innovative and incredible.
Agreed. I think the Cybertruck ramp is going to be quite the learning experience. Nothing like this has ever been done before. Totally uncharted territory as opposed to slightly uncharted territory with previous models. We may see production hell round 2. The good news is production hell on Cybertruck won't risk Tesla going bankrupt, whereas production hell on the Model 3 nearly killed the company. Didn't, but had a genuine chance of doing so. Of course, when I say killed the company, what I really mean is they would have had to raise more money, dilute shareholders, worst case scenario, they get acquired, everything's fine. Point is, Cybertruck, probably going to be a very brutal process, ramping up production, lots of things to figure out, lots of mistakes. However, Cybertruck, in the short term as it ramps up, will be an irrelevant sideshow. Model Y already the world's best-selling vehicle and still ramping up production globally. Model 3 slaying it. Tesla already building a factory for their next-gen vehicle in Mexico. So whatever bumps in the road there are ramping up Cybertruck production, no big deal. In fact, they're to be expected.
But Elon's back focused on this, and this has really been my push as an investor for the last 6 months, which I feel have been very successful, is really getting them refocused and really energized around Tesla to take on this challenge, because I know with Elon's focus and the team at Tesla that they will achieve scale of the vehicle, and they will get a vehicle out this year, even if it's like one on New Year's Eve, they'll probably get it out. And I'm very optimistic about the truck business.
Now, Ross, I've got to ask you, because, there was a suggestion that we are going to see weakness in production in Q3 because of, the factory upgrades. Obviously, they're really trying to, shift production lines and, upgrade production upgrade the total capacity for output. But do you think that puts at risk any, the 1.8 million that they're looking at shipping out for the full year? Because Elon, at the end of the call, he was a little bit reticent. He seemed a little bit angry at, giving some specific details. Do you think that's at risk in your view?
Well, I think that the push on the short term of a few cars here or there, now that they're making millions of cars and their revenues a bit on $100 billion run rate, it gets a little nitpicky. So I get that. I think for some of us, I really thought they would push production, but now because they do have some level of supply and demand balance, there isn't a huge reason for them to really try to push production if they can improve quality of the process, improve margins in the process longer term. And Tesla's constantly improving. And so whatever they're going to do to stop production will have an ultimate long-term benefit for the production line. So I have a lot of faith this will actually be good. And we're long-term investors in Tesla. And I say this all the time. You can't buy Tesla stock and want to make a ton of money next year. You have to look at over the next 5 years. They're a hugely consequential company doing amazing things, and it will be a fun ride, I can tell you that.
Fun ride for sure, and definitely anything but boring. As I record this, Tesla's market cap currently just over $800 billion. 5 years from now, 2028. Leave your guess in the comments below. What will Tesla's market cap be half a decade from now? Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.